Yo, Market Scraper here. I know just how hard it is to create a portfolio from scratch when we're at all-time highs. That's why I thought it might be useful for folks to see the portfolio that I actually created less than 2 months ago when we're at all-time highs. And the strategy that I went around in picking stocks, and if you're not picking stocks, I think ETFs and things like that is completely a great idea for retirement funds. But for this IRA account, I decided to pick my own stocks. My plan going into it was to be a little bit more conservative, pick great dividend companies, but we'll see how that turned out actually. And the reason why I pick stocks here is because all of my 401k is in index funds, and so I already have that baseline of a lot of my assets in index funds already. All right, so let's jump into my portfolio. Right before we look at this portfolio, don't forget to smash down that like button. It really helps this channel, helps other folks be able to view this content. And if you haven't already, hit that subscribe button. It would be much appreciated. Okay, let's get into this. All right, let's move this over here. Okay, so I started this portfolio on November 14th, and this is for the end of last week, the 3rd of January. I put in the maximum contribution for the year, $6,000. I got a bonus from the brokerage that I signed up with for $100 here. Okay, and so a quick overview of this portfolio and how it's doing in terms of the comparison to the S&P 500 and also the dividends and gains. So this portfolio actually is beating the S&P 500 currently. And a couple things about beating the S&P 500 and that I've been seeing a few folks not understanding how to compare it correctly. So first off, I've seen people compare the growth of S&P 500 like maybe the last half of the year and are like, wow, the S&P 500 gained 15%, for example. And I have an account that I picked stocks and did some swing trades, and I only gained 20% or so in 2 years. So obviously this means that 15% gain just in the last 6 months, that means ETFs are way better. Now the question is this. You have to remember that S&P 500 in 2018 actually lost money. That was the year that there was a decline. So what was the percent increase of the ETF that follows S&P 500 for that 2-year period? And if that's 20% or so, then analyze that number and see if what you did in those 2 years is comparable to what that ETF actually did in those 2 years. So that's one. The more common thing that I see is, oh, I didn't do as well as the S&P 500 because I only gained 20%, for example, and the S&P 500 gained 30%. One thing there is I have to realize that that's from the beginning of the year to the end of the year, it gained like 30%, for example. And if you're putting in $10,000, for example, and you put in $5,000 at January 1st, and so that's going to get that 30% gain in that S&P 500. But then you put the second $5,000 maybe somewhere in the middle, and that only gained a 15% gain. So your total gain for the year will only be 22.5%, for example, because you will have the average between a 30% gain and a 15% gain. So that's going to be 30% plus 50% divided by 2, about 22.5%. So even though this portfolio is actually beating the S&P 500, matching it outright from the creation of this portfolio, the money that I put in this account, I didn't invest it all on November 14th. I invested over a period of time from November 14th to actually December 12th. And so if you look at the returns of the S&P 500 on November 14th to the same time period, that was 4.46%. But from the 12th to now, it's 2.08%. So the average is actually 3.27%. So that might be kind of undershooting or overshooting. I don't really know exactly, but this gives you a good comparison of how one's portfolio might be doing. And this is more guesstimating. This is not exact math. If I want to do the exact math, I would compare the exact purchase dates to the exact dates that and the values that the S&P 500 had, and then value that. But this is gives you a quick idea that's in between, these numbers. But regardless, this number actually exceeded both those numbers. And I just have been seeing that happen because when you're averaging in, you're not gaining that full year's value that S&P 500, the index, is showing that it gained this much over that time. Just want to make sure that if any folks are having any confusion with that, let me know. If that didn't make any sense at all, just leave a comment down below and I'll try to answer those as well. So my main strategy for this account was to invest more conservatively, not buy Tesla in this account, one of my only accounts that doesn't have Tesla in it, but I wanted to make it more conservative, dividend paying, and that was kind of my initial thought here. But let's see how that turned out. And one main thing about this portfolio actually is that I buy stocks at a discount. That's kind of what I do. So Johnson & Johnson, if we look at the chart here, so I bought Johnson & Johnson on November 14th. So that was right here actually, right before it started to go up a lot. So Johnson & Johnson stock was being suppressed here due to a lot of the legal cases that they had against them. And the second reason that they're being suppressed here, and a lot of healthcare stocks went down a lot in this time period due to the rhetoric that was going on in the presidential debates as well. So that's the stock that I bought here, and it's a stock I own in one of my other accounts, so it's a stock I have been buying already, so I wanted to buy this for this account as well. The second stock that I purchased actually was Cisco. Cisco is a stock that I've been keeping my eye on. I like the CEO and I like the vision and the direction the company is going in, and they're keeping up with time. So let's look at Cisco stock and the points that I purchased them. So we can see here Cisco stock went down a lot, and I still didn't buy Cisco stock in this range here, but then finally Cisco stock went down again. November 14th is actually when I also bought Cisco stock, so I jumped in right when this crashed here. I bought it a second time on December 2nd, actually, around here. And those are the two purchases I made for Cisco. So the third stock that I bought here actually went against the plan that I had of buying dividend companies, and that stock is Amazon. And the reason why I bought Amazon here was because, so like the other stocks in this list, Amazon's valuation was attractive. It's been suppressed for a while, and the reason why I decided to go for Amazon here is because I don't actually own Amazon in my other accounts. I wanted the opportunity, and I happen to have the capital lying around in this account specifically to buy and own Amazon. So I bought a share of Amazon, and I bought that stock the 15th of November. So I bought that right here. And it ended up being a pretty good time to buy that stock. I wouldn't be surprised to see us at least test all-time highs again sometime soon, hit that $2,000 level. The fourth stock that I ended up buying in this portfolio is 3M. So 3M is a company that I own in my other portfolios as well. And where I bought this stock was November 20th. So let's see where that is. I bought it right here. So at a pretty good place before it went up again. This is consistently following the theme of buying these good companies at discounts. The next stock that I purchased was Ltc Properties, and guess what? Ltc Properties was, yep, you guessed it, on sale. So Ltc Properties, let's look at the chart really quickly. I bought Ltc Properties actually right when it started to dip a lot. I started a position here on the 12th of December. I think I just bought one additional share because it was the last bit of money I had in this account on the 23rd. So right over here, this area. Okay, let's look at our portfolio. Being patient, not just putting all my money into the market at once, has definitely paid off so far. These companies have all gone up. I thought they were undervalued at the time. Ltc Properties hasn't gone up a lot at all, but it has given me a dividend so far. So if we look over here, these are the dividends I've gained so far. I've gained $19.11, and that's reflected within the price paid here. And the appreciation gains that do not include dividends is $395.59, and that's the total gains that we see here, and it's 6.48%. And I do have $9.90 available to add to another purchase. So this will probably just sit here until I add more money this year for my Roth IRA, and I hope to add the limit to this count as well. Let me know if you guys are interested in seeing more updates on this portfolio, or when I make transactions, when I make new purchases for the year of 2020, I can make updates on that. And I hope that this was helpful for those starting out making a new portfolio. And this shows what you can do with buying individual stocks, buying them on discounts, even when markets are all-time high. And what do I mean by markets being at all-time highs? Let's take a quick look at the S&P 500 and see what it was like between the dates of 11/14 and 12/12 when I was buying these stocks. All right, so this is the S&P 500 here, and so let's look at November 14th. We were right here. So this was fresh all-time highs, and the last purchase I made in this specific portfolio was on December 12th. So if we go to December 12th, that's right here. So again, another all-time high. Markets are continuing to go up at that time. Yet I was still able to find these 5 companies that I wanted to buy at discounts. Even though the markets kept going up during this time, I was able to find deals and outpace the market significantly, as of today at least. And it'll be interesting to see how that trend continues and to see if these purchases were a smart choice. Do you think they were a smart choice, Sarah? I hope this was helpful. I hope you guys learned something about buying stocks at all-time highs and creating a portfolio from scratch. And just remember, this is my own personal journey here. This is not financial advice. I hope you guys can learn from my mistakes that I make and any things that I happen to do right. I'll see you guys next time. Thanks for watching.